Europe's stock markets were boosted by the European Central Bank's bond buying scheme, with several share indexes hitting 7-year highs. Banks and car makers were among the best performing companies, as they're likely to benefit from cheap lending rates and a weaker euro. But the head of the World Bank told Euronews governments also need to do more.
We've just received the news from the ECB, the long-awaited news from the European Central Bank. Can I have your take on that?
This is a tool, and it should be used because the potential to have a self-fulfilling and continuous deflationary cycle was very real. The other part of it, the other half of this, is that though still is not enough to really solve the problem. You know, the countries that are in the most trouble really have to move forward with their reform agenda. What an opportunity. We have historically low oil prices. You know, now we have quantitative easing. This is now the time to really jump in.
Germany was the least enthusiastic, with economists, politicians and business leaders there warning this is taking the euro system deeper into uncharted territory, with the head of the influential IFO economic think tank calling it illegal, unsolid state financing by printing money. At the Davos Economic Forum, they are less sceptical.
Despite some cautious voices, there's a general sense of enthusiasm at the forum about the European Central Bank's landmark move. Several delegates I've spoken to have pointed to the open-endedness of the programme, a sign that ECB quantitative easing could be with us for quite some time. Sarah Chappell, Euronews, Davos.